In this week's recap, stocks stall late in the week thanks to a slide in the tech market. All this while the jobs recovery makes continued progress. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. A late week sell-off sent stocks broadly lower as investors took some profits after stocks reached all-time highs earlier in the week. The Dow Jones Industrials Average slid 1.82%, while the Standard & Poor's 500 slumped 2.31%. The NASDAQ Composite Index dropped 3.27% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, fell 0.62%. Stocks hit a wall late last week as the technology companies, which had led the market higher, slipped in Thursday and Friday trading, dragging down the overall market. The week began on an upbeat note as August momentum continued into the start of September. While participation in the rally on Tuesday and Wednesday was fairly broad, technology stocks continued to be the focus of market strength. But that sentiment changed quickly on Thursday. With little warning and no obvious catalyst, it remains unclear whether the technology sell-off last week was the result of market technicals or a fundamental change in investor outlook. The coming weeks may provide some clarity in this regard. Last week saw a series of employment-related reports that evidenced a continued labor market recovery. The Automated Data Processing, or ADP, employment survey showed that private payrolls increased by 428,000 in August, falling short of consensus expectations of over 1.1 million. News turned more positive as new jobless claims checked in at 881,000, an improvement from over 1 million new claims the prior week. Americans receiving unemployment declined by 1.24 million to 13.3 million, half the peak number in May. And finally, the monthly jobs report indicated that nearly 1.4 million non-farm jobs were added last month, with the unemployment rate declining to 8.4%. The progress was predominantly attributable to government hiring, primarily of new census workers, though the retail, leisure, and hospitality sectors saw gains in new hiring. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients' life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out NoCostFinancialDashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.